Our next guest says today's market moves indicate that the Sell America trade is back as investors try to minimize exposure to what he calls a volatile and unreliable U.S. Joining us now is Krishna Guha. He's the vice chairman of Evercore ISI. Krishna, great to have you with us.
Likewise, great to be with you.
We've certainly been in different market moments where there is immense investor skepticism about where the U.S. stands, what the U.S. is doing, and those prove to be buying opportunities. Where are we here? Is this time different?
So, look, I think investors reasonably continue to have a baseline in which we will end up finding a compromise, an off-ramp, and we will not go through the proposed trade escalation. I think that's the right base case. More than that, I think it's not a 55% probability. I think it's higher than that, right? It's a good, solid base case, but it's not a certainty. And I think what we're seeing in markets is a clear indication directionally of what happens if we continue to push down this route. It is risk off, but dollar lower, not higher, because of increased global aversion to U.S. assets requiring a higher compensation, some U.S. risk premium to invest in the U.S. And of course, as you noted earlier, yields moving up, not down.
We saw a rally in hard assets, gold and silver, most notably, Krishna. Is that the way to go? I mean, if you want to go risk off, is it going to be anywhere in equities, or is it a better risk off trade to be in metals?
So look, metals are crowded, metals are very richly valued, but I think it is a sobering point to consider that the U.S. Treasury is not performing the normal safe haven role in this moment, just as it didn't in April last year when we had the Liberation Day tariff shock. Now, to date, the moves right in this latest episode are much more muted. And again, you'd expect that if you think that investors are putting a 70, 80% or more probability that this Greenland business gets wrapped up. But if the Treasury is not acting as the safe haven asset, something else has to. Gold and precious metals, Swiss franc, the list isn't very long.
Krishna, Canadian Prime Minister Mark Carney got a lot of attention today, a lot of words about just sort of a long-term program of disengagement with the U.S. and finding other kind of partners and connections elsewhere. Is this something that the markets even have the capacity to price, or should we be? I mean, ultimately, you know, we still have the biggest and deepest markets. Treasuries are basically the water and the plumbing of the global financial system. We're making the AI trade here. I just wonder if it behooves an investor to actually start to think in these tectonic terms.
So you raised some really interesting points there. So first of all, continue to believe that U.S. fundamentals are unparalleled in the world. U.S. economic fundamentals, productivity, innovation, AI. The U.S. fundamentals are incredibly attractive. But you now have this overlay, which we've had on-off since April of last year, but back in force, of policy uncertainty, policy volatility, but not just volatility, actions that are systematically alienating trading partners and providers of capital into the U.S. So I think investors have to be able to do two things at once. The first is to be level-headed about the probabilities of hyper-escalation at this point. It's not the base case. It is a risk case that you need to factor in, but it's not the base case. You've got to be careful you don't oversteer here. On the other side, even in a baseline case where we ultimately are able to move this on to a de-escalation path over the next few weeks, I think Carney is right that there's no turning back here. There is some fundamental tectonic plate shifts underway, that the U.S. is no longer providing the so-called global public goods that it used to provide to the global system. The U.S. is exerting its leverage over allies and partners who, of course, are more vulnerable to this than countries like China, who've always been positioned against, prepared against U.S. pressure. This is going to lead inexorably to significant structural changes in the global economy. Doesn't mean everyone's going to dump their U.S. assets, but we need to start thinking about what may be different in that world on a secular basis.